Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to get a little bit of a post-market recap for today on Tuesday, March, I believe it's the 10th now, maybe it's the 9th. Some days the days just kind of fly through there. Well, let's kind of go through the market here. The first market I want to look at is obviously the stock market, the equities market, looking at the S&P 500 here. Now, probably as more than anybody out there, I've probably been the one that has been a little bit bearish on the market. As everybody knows, I am neutral right now in the marketplace. I do expect the market to continue to come down here. Now, what kind of the driving force of the market today was nothing bad from an economic standpoint in the U.S. marketplace. We were looking more in terms of internationally in China. The equities markets around the globe have been struggling recently, and you're going to see a little bit of the market pull back here. There's nothing to be too concerned with. We're only down about 3.5%. 4% from the highs, and to be honest with you, would love a little bit of a deeper pullback here as I am a little slightly bearish in my portfolio. I do have put options on IWM. I am still short the oil market. I'm short energy stocks out there as well. I'm short GMCR and GoPro and some other companies out there. So I am carrying a slightly bearish delta in my portfolio to offset some of the additional risk out there. And I do anticipate the market to continue to come down. And the biggest reason, and I've been a little bit of a broken record over this over the course of the last few months, is the dollar index. Ladies and gentlemen, it's, and again, I harp, and I get it. I'm a broken record on that, but you got to understand the dollar. You got to understand your number one investment. You got to understand the currency market. Even if you don't trade currencies, there is such a vital impact when the dollar is strong in relative to other currencies, because what that happens is our exporting is going to go down. When our exporting goes down because their currencies are cheaper and our currency is very strong here in the U.S., all of a sudden that's going to have an impact to the equities markets, because the revenues, the earnings reports, they all go down as well. And I've been saying one of my predictions earlier this year was that the dollar coming into to January here, the market right there was January, and the market was about at 90. And I said, you know what? It's my anticipation that the dollar index is going to pair at 100. It's my anticipation that the euro is going to pair against the dollar at $1. And I thought it was going to take like more than 2.5 months, but we are literally 75 cents away from the dollar index going up into that very important significant whole number as 100. And I wouldn't be surprised to see it slow down at 100 just because of the significant nature to what that resistance level means. But I do not see a end in sight for the strength of the dollar. I anticipate the dollar continuing to grow in strength. I anticipate the dollar breaking eventually the 100 level, and as such, I will be long dollar, short euro, short yen, and short a couple of the other major currency pairs out there as well, because I just simply believe that the underlying fundamental theme of the marketplace is that the dollar will continue to go up, and that means coming into the crude oil market, looking at crude oil here. Let's go back a little bit. Look at crude oil. For a very long time, I've been saying that I believe crude oil will continue to go down. There's nothing really that happened today that was that dramatic in terms of crude oil. It came down a little bit. It's at 48.75 right now, but there was not a significant move to the downside. So the selling naked puts on crude is still solid. You don't want to sell too much time on those, because I do anticipate it coming down even more given the fact that the dollar is going to be strong. But until it really breaks this 43.5 mark right there, this is kind of starting to look a little bit of sideways neutrality. So looking at a few things here. Number one, marketplace is just retracing, coming down. The dollar is going to continue to grow in strength, and we have seen some correlations in the market with the market going up and the dollar going up. So just because the dollar goes up doesn't mean the equities market is just going to fly downwards. I don't anticipate a tremendous amount of volatility until we start to see a little bit more decreases, a little bit more in terms of interest rates going up in the U.S. later on this summer. So be prepared for that. Look for crude to come down a little bit. Look for the dollar to continue to strengthen. And with all intensive purposes, given the fact that the market had a wide body candle coming to the downside, I do anticipate that personally coming down a little bit more in terms of the market. And looking at here, you're looking at the gold futures contracts. A lot of momentum to the downside. As a seller, you might be looking to lock in profit down into the 1140 range. I don't think it's going to get much past that for right now. That could be a buy zone, but again, with the commodities, I'm just not ready to go long on the commodities outside just a few days, and that includes both gold, silver, also in terms of crude oil out there as well. Strong dollar, short market worked out really, really well for Coach Matt today. I'm looking to carry that into tomorrow. Hopefully you enjoyed the market recap for today, and we will start talking about more things tomorrow.